FA1 Part C. Recording and accounting for credit transactions. Chapter 15. Payables Ledger. The topics that this presentation will cover are 1. Personal accounts for suppliers. 2. Recording transactions in the payables ledger. 3. Payments to suppliers. 4. The age analysis of payables and other reports. 5. Contra entries with the receivables ledger. 1. The payables ledger contains all the personal suppliers' accounts, trade payables. It is a record of how much is due to the suppliers and what the debt consists of. These are some of the reasons a business may need personal accounts for suppliers. A supplier might contact the business and ask for payment of the full balance due. The staff of the business need to be able to check that the balance that is claimed to be owed is correct and is indeed due for payment. Suppliers send statements to the business. A business needs to maintain their own records, so they can check that the supplier's statement is correct. The business needs to keep a complete record of the items that make up the balance in the supplier's account, so that they can make the right payments on a regular basis. It may be easier for a business not to pay all the invoices separately, when they receive them, but to rather pay all the invoices that are due in a month, at the end of the month. When a supplier invoice is received and entered in the purchase day book, it is a credit in the relevant supplier account in the payable ledger. When a credit note from a supplier is received and entered in the purchase returns day book, it is a debit in the relevant supplier account in the payable ledger. When a payment is made to a supplier and entered in the cash book, it is a debit in the relevant supplier account in the payable ledger. When a discount received is received and entered in the cash book, it is a debit in the relevant supplier account in the payable ledger. A debit balance of a supplier in the payable ledger is unusual. It could be due to an overpayment to the supplier, or a credit note was received from the supplier after full payment. If there is frequently a debit balance in a supplier's account, it needs to be investigated. It could mean that the procedures followed in the payables ledger department needs to be improved. A business may not need a payable ledger if only a few credit purchases are made. Examples of this type of business are small shops and clubs. Any credit purchase that the business would make would be posted straight to the general ledger. The payables ledger does not contain the balances for all types of supplier. It will normally only cover the trade account payables. Trade account payables are liabilities that relate to the trade of the business. They are suppliers that supply the goods and services that the business buy, in order to sell, as well as the suppliers of the goods and services that a business need to maintain its business, for example, office supplies, rent, electricity. Other payables will not be recorded in the payable ledger, and will be recorded straight to the general ledger. Examples of other payables are liabilities to pay wages and salaries. For example, if a company's financial year-end falls on a day before the day employees of a business are due to be paid, the business at that point in time owe the employees almost all their salaries or wages and needs to show that as a payable in the statement of financial position. Taxes, for example, sales tax, VAT, and payroll tax, PAYE. Amounts payable for goods and services that are not directly related to the trade of the business, for example, the purchase of non-current assets. Some overhead expenditures, such as rent, may be processed in the payable ledger as a trade payable, in some businesses, but in other businesses, it may be processed separately as other payables. Apart from the other payables, there is a special category of payables that needs to be shown separately in the statement of financial position. They are company tax, the tax that a limited liability company pays on its profit. Bank loans and overdrafts. Stop the lecture. Answer the questions on page 294 of your interactive text study guide. 2. Suppliers will usually have a credit balance in the payables ledger. Monies are owed to the supplier, making them a liability, or a payable of the business. Recording of individual entries to the payable ledger is the same process in principle as the receivable ledger, but a mirror image. For example, instead of debits, credits. When recording the individual invoices from a supplier, it is credited to the individual supplier payable ledger account. When recording the total batches of invoices, they are credited to the payables control account in the general ledger. When recording the net purchases or expenses excluding sales tax, VAT, they are debited to the relevant purchases or expenses account. To see a diagram of the payable ledger postings, see page 296 of your interactive text study guide. The same accounts in the payables ledger and the general ledger that are used for purchases, are used for purchase returns, but the other side of the accounts are used, for example, instead of credits, debits. Discount received from suppliers are normally recorded in a memorandum column in the cash book. The double entry for discount received is debit, payable control account. Credit, discount received. Stop the lecture. Answer the questions on page 296 of your interactive text study guide. All records of invoices and credit notes need to be retained and filed after processing, in case of any queries from the supplier, management, or the auditors. 3. Payments to suppliers need to be organized according to the periodic procedures of the business. There needs to be checks and authorization procedures, to ensure that only valid payments to suppliers are made. As the payment methods vary, the checks that are needed, need to differ accordingly. Payments to a supplier need to be done on a regular basis. A business may not want to pay the supplier till the end of the allowed credit period, but to maintain good relations with the supplier, they need to pay the supplier when the payment is due, and inform the supplier of any queries or problems. A supplier will send the business a monthly statement, showing all the transactions that have occurred that month. It is important to compare the supplier's statement to the supplier personal account in the payable ledger of the business, so that any discrepancies can be identified, and any errors corrected. These are the steps to follow when doing a supplier statement reconciliations. Step 1. Tick off the common items in both the supplier's statement and the payable ledger supplier account. Step 2. Agree the opening balance of the supplier statement with the payables ledger supplier account. Step 3. Allocate the payments to invoices after allowing for any credit notes. Step 4. Identify the differences. Reconciling items are the items that the difference between the supplier statement and the supplier account in the payables ledger consist of. These are some of the reasons for reconciling items. Payment in transit. A payment is recorded in the purchase ledger as soon as it is made. There is usually a delay, either due to the post or processing, before the payment is made in the supplier's records. This creates a timing difference. Omitted invoice and credit note. Invoices or credit notes may either be in the business or the supplier's records, but not in the other's records, because of either an error, an omission, or a timing difference between the different ledgers. Other errors. Addition errors can occur, particularly if the statement of account is prepared manually. Invoices and credit notes can be misposted to the wrong supplier account. Cash is not a usual method of payment for a supplier, it is usually used for non-credit, petty cash purchases. Suppliers are usually paid with a check, or via an interbank transfer. 3. Deciding who, and when suppliers should be paid, should be decided by a senior official in the business. To see the different items that are involved in selecting items for payment, see the table on page 301 and 302 of your interactive text study guide. A computerized system may give you the option to print out checks for payment. It may also be able to print out a remittance advice for each payment. A remittance advice tells the recipient of the payment which invoices the payment is for. There should be checks over payments to ensure that only valid payments, payments that should be made, are made. To see the procedures that are used to check payments, see the table on page 303 of your interactive text study guide. Automatic payment methods, used in large businesses, may include the use of mechanical signature of payments selected by the computer. If this system is used, then the same checks that are usually done on individual payments, are not done as in a small business. So to replace the lack of checks on individual payments, there needs to be strong checks on the payable ledger balances, so that the wrong payments are not made. If automated electronic payment methods are used, then there needs to be a special procedure to ensure that payments are properly authorized. Sometimes the usual payment method may need to be bypassed. Proper checks need to be applied and a high level of authorization needs to be obtained, before the different payment method can be used. 4. The age analysis of payables shows the ages of debt. It shows how quickly the business is paying their suppliers. It is usually measured in months, and it can be used to highlight overdue supplier accounts. A business will want to delay making payments to suppliers for as long as possible. But if they delay making payments too long, the business could lose their discount. They could lose the supplier's goodwill. They could even lose the facility to buy on credit. The other reports of the payable ledger package are similar to reports of receivable ledger package, see Chapter 13. They are the day books, supplier account statement of transactions and current balance, remittance advice, sales tax, VAT, analysis, purchases analysis, list of supplier accounts, mailing list of suppliers' names and addresses. Stop the lecture. Answer the questions on page 304 of your interactive text study guide. 5. Contra entries net off amounts that are due, to and from, the same person in the payables and receivables ledger. A business may purchase goods from, and sell to, the same person on credit. Even though the transactions were made to the same person, there will still be separate accounts in the payables and receivable ledgers. If the two parties wish to settle their account, by netting of the amounts they owe to each other, the settlement would be made in contra. In the receivable ledger and payable ledger, the double entries would be: debit, the payables account in the payable ledger; credit, the receivables account in the receivable ledger. In the general ledger, the entry would be: debit, total payables; credit, total receivables. Stop the lecture. Answer the questions on page 305 of your interactive text study guide. This is the end of Chapter 15. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part C, Chapter 15. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. What does the payables ledger contain? Question 2. What are trade payables? Question 3. Give 2 examples of other payables. Question 4. What does the age analysis of payables do? Question 5. What does settlement in contra mean? After doing the quick quiz, do the online questions for Part C, Chapter 15. Do the questions, until you achieve 80%. Replay the lecture as needed.